Bitcoin price was down. There was a lot of excitement after BlackRock filed for a Bitcoin ETF, shot up from 26,000 to 30,000 and just came.
Hey guys, welcome back to Everyday Finance. In this video, Cathie would talk about Bitcoin price and also discuss about crypto and all currencies prices. Cathie says Bitcoin price down after BlackRock field, and Cathie says about fixed income as she mentioned interest rate went up. Those interest rate sectors, but it's really important test. We really didn't make it past the peaks from October of 2022. Now what's the similarities between now and then? Back then, the Chinese Yuan was depreciating at our rate that the Chinese government didn't like. And a lot of secrets Cathie discuss, so please watch the video to end and like, share. Subscribe to our channel Everyday Finance. Thanks.
So in the last month, the best sector has been energy. Energy prices have gone up. We got some data from Saudi Arabia today, or on Saudi Arabia and Kuwait. Their exports have collapsed. They've gone from, in the case of Saudi Arabia alone, I think roughly a 7.5 to 8 million unit barrel range down to 5.5 million. I mean, that's unbelievable, especially because at these prices, even at these prices, it was break even at the prior level of production. So it's probably in a deficit position, and we're marveling at the prices it's paying to attract sports franchises. So, you know, that's a big disconnect out there. Nonetheless, energy sector was the best. And, you know, if Saudi Arabia is going to normalize its production schedules, which it will have to pay for all these sports franchises, we believe that energy prices will come down, especially as electric and autonomous make their way into the system. Healthcare and communication services were the next best. And while energy was up, healthcare and communication services were down. On the other side of the ledger, interest rate sensitive stocks and categories were hit hardest, utilities and real estate, because the 10-year treasury yield, because interest rates went up. The other category that was down, and this is surprising when the market is in a weak spot, consumer staples tend to outperform. They did not this time, and I think it is because of what I've mentioned about their pricing power, at least the power they thought they had, really diminishing quite significantly. In the beginning, the market is beginning to understand that. Fixed income, as I mentioned, interest rates went up, hurt those interest rates sectors, but it was a really important test. We really didn't make it past the peaks from October of 2022. Now, what is the similarity between now and then? Back then, the Chinese yuan was depreciating at a rate that the Chinese government did not like. And so it started selling our bonds, and its reserves have actually been going down. Its dollar reserves are down from a peak of 1.2 trillion to 834 billion now. And the reserves are dropping 10 to 20 billion a month. We believe that this last month, which is when the yuan went back to the level where it was last October, that the PBOC was selling its dollar reserves aggressively in order to get dollars to support the yuan. And so we wouldn't be surprised to see a very big drop in those foreign exchange reserves. So, and Japan is doing the same thing. It did not like the level to which the yen had depreciated, 145 to the dollar. And so it too has been selling. So there have been some big sellers in the market: China, Japan, our own treasury, to support fiscal spending. And yet it was not able to crack that 435 level from last October. That was very bullish. It got down to the low fours with this morning's employment report, and now is backing up a bit to 417. But so we're still in this testing level. We think China is in a world of hurt. The depreciation of the yuan means that the purchasing power of the yuan is diminishing, which hurts their consumer. The consumer, we think, is already feeling a very low level of confidence because property prices are still falling. And these real estate companies, so Country Garden and Evergrande, they are still defaulting on debt, and it's reaching the headlines. Why is this important to the consumer in China? 70 to 75% of their savings is in the property sector, and very often in empty apartments. So not a good thing for confidence. As far as the other news in the fixed income realm, I mentioned the yield curve earlier, still inverted, but spreads, so the difference between corporate interest rates and the government interest rates, those are well behaved. It doesn't seem like there's a lot of stress out there, or that fixed income investors are noticing it. But stay tuned. If the consumer gives way, those spreads will pick up. Commodity prices in the month were flat on average. Bitcoin price was down. There was a lot of excitement after BlackRock filed for a Bitcoin ETF, shot up from 26,000 to 30,000 and just came back down. It got a little excited when the SEC lost its case against Grayscale, and then came right back down when the SEC basically did not approve the Bitcoin filing of Invesco and Wisdom Tree. So that was interesting. And then just a few more points on deflation. There's bad deflation, and I talked a little bit about that. If companies have taken their prices too far, those will unwind, and that will probably hit margins. And certainly monetary policy has set us up for a lot more of that, because M2 is still declining on a year-over-year basis. The full impact of monetary policy today will not be felt for about a year. So we think the bad deflation could move into next year. But as I mentioned before, that severe margin pressure will attract or will encourage more companies to adopt innovation. Innovation solves problems. I mentioned artificial intelligence, the Zoom example. AI training costs are dropping 70% per year. Robotics. Robotics is an antidote to some of these very high wage agreements, and we think there will be a lot of attrition, and robots will take the place of a lot of people. And robot prices, industrial robot prices, for every cumulative doubling in the number of industrial robots produced, meaning 1 to 2, 2 to 4, 4 to 8, and so forth. That's the cumulative doubling. Industrial robot costs drop 50%. And then energy storage in the auto space, for every cumulative doubling in electric vehicle sales produced, drivetrain battery pack system costs dropped by 28%. And then we'll end up at Bitcoin, which is where we started today. And as you will hear in this Bitcoin brainstorm, and same with the very first Bitcoin brainstorm that we did with our partners at Bitcoin Park in Nashville, one of the biggest opportunities out there is to eliminate a tax on all purchases done through the traditional financial system. And there's a tax on those unless you're using cash. And the tax is somewhere between 2.5% and 4%. That's a pretty big tax in terms of using debit and credit cards and other intermediaries. These intermediaries are going to be disintermediated by the convergence between Bitcoin and artificial intelligence. And as I started out saying, and I'm sure, and Yassi featured as well, you'll see how provocative this is going to be, and how you should all, to the extent you own businesses or are part of a team that has a lot of responsibility in running your team and running the operations.